All right, traders. So in this video, I want to talk about risk management, right? A lot of people I know are aspiring to become funded traders, whether you're looking to just trade your personal account or even just, getting a funded account. Risk management's a really big piece of this pie, right? When it comes to trading, a lot of it is obviously psychology, but another thing is how much risk are you willing to withstand? Like what are you really willing to put on the table? How much are you really willing to lose? And then you have to ask yourself, how much are you allowed to lose? Right? Before you get margin called, before you lose your account, or you take a look at like a prop fund. Maybe you're going for, my Forex funds. You want to become a funded trader. One of the things that you have to understand is that you're only allowed a 5% drawdown per day and then a 10% loss max, right? So some of these things you have to be able to understand. You can't open a bunch of positions. You can't use whatever lot size you would like. So being able to understand how much risk you're actually able to lose and willing to lose is going to be a big piece of the pie. For me personally, when I was able to go through and I passed my phase one, I passed my phase two and became a live trader, one of the things that I did within my trading plan is I knew I was never going to risk more than 1%. Now, why is that? Because I have a trading rule set in place that if I take three losses in a day, I'm done for the day. If I have two losing days in a row, I'm done for the week, right? I take that time to just kind of understand why is it I'm taking these losses, and I turn them into lessons, but also it makes sure I'm never going to be within that risk threshold of losing my account, or losing a phase one or a phase two, or losing that live account. You have to put yourself in that position to where you know how much you are able to lose and then how much you're willing to lose. So this is going to be one of the very big things when it comes to your trading plan and your trading career. If you're going to become a profitable trader, if you're going to become a successful trader, right, you need to go ahead and get this under control. I know a lot of people come in here from all different, learnings. Maybe you guys, heard somebody on YouTube say they do 10% per trade. Some do 2%, 5%. Some people put the whole account on the line for one trade, and it's not smart. So coming in and understanding what is it that you're willing to lose is going to be a big thing. So throughout my entire journey of becoming a funded, profitable trader, going through my phase one, going through my phase two, and now trading this live account, I had to ask myself, how much am I willing to lose, right? So on a lot of these trades, I was literally risking 1/4%, 1/2%, at most 1% of my account per trade. So on a $100,000 account, if you're risking 1%, that means you're allowed to lose $1,000. Now, that $1,000 could be broke up between a 5 pip stop loss, a 10 pip stop loss, a 20 pip stop loss. You could go through and identify that to make it set up to where no matter what, if price hits your stop loss, the most you will lose is 1%. Or maybe you could say, hey, I want to risk half of 1%. Now you can lose $500, right? So let's say you had a 10 pip stop loss and you ask yourself, okay, I'm allowed to lose $500. I have a 10 pip stop loss. What would I be able to go through and do? You could use a $5 lot size, because every pip is going to be $50, right? So you go through there, 10 pips, you have 0.5% risk. You're able to use a $5 lot size on this trade, and you're at most going to risk 1% of your account. These are some of the things that you have to ask yourself, and some of the things that you have to understand when it comes to, becoming a profitable trader. Because a lot of people just be like, oh, I want to use a $2 lot size every time. But sometimes you have a 5 pip stop loss. Sometimes you have a 10 pip, 15 pip stop loss. Sometimes maybe you're just taking a signal and it's like a 1-to-1 risk to reward, and it's got like a 50 pip stop loss. All right. I don't know where you're getting your information, what you're doing, but the thing is, you have to understand this. You can't just say, hey, I'm going to use a standard lot every time, or hey, I'm going to use, this every time. It's per trade. Right? So you have to analyze, okay, my account balance at this time is $108,650, whatever, and then you just go ahead and you multiply that by whatever percent you're willing to risk. If I'm willing to use a 0.5%, I'm just going to take that account balance, multiply 0.005, there's a 0.5%, and then it's going to tell me how much I'm willing to lose. Divide that by the number of pips, it's going to let you know what lot size you can use. You go through this each trade, and you're going to be able to understand this, right? I go through my trading plan on every single trade, and I write down what is this trade? What is my account balance? What is my lot size? Is this, am I taking this for a long? Am I taking this for a short? You know, what is my, my take profit? What is my stop loss? I write all these things down because I'm able to go through and have an actual checklist of doing this. I'm not just jumping in a trade to be in a trade. I'm not just jumping in a trade on a market impulse. I'm not just jumping in a trade for out of all this stuff. I'm using proper risk management for each and every single trade because I treat this thing like a business, and that is exactly what you need to do. So when it comes to this, if you guys are looking to become a funded trader, you can't be risking these crazy percents. You need to get used to risking a 0.5%, 1%. At most, I would say on a funded account, you could ever risk would be 2%. Don't do anything more than that. You don't need to do anything crazy like that, guys. Just keep it simple. You don't need to jump into a bunch of trades. You don't need to do all this stuff. Find a couple of really nice setups each week, and you're gonna be able to go through and pass your account. You're gonna be able to go through and get funded, and then you're gonna be able to actually maintain it. If you follow through and you use those same rules that you use to get funded on your live account, it's no different. And then you can scale for it. Maybe you wanna start off and you wanna get like a $5,000 funded account or a $10,000 funded account. You could go through and you can do that, right? But get up to the point to where you understand that. Start using a demo account now and actually train as you would fight, right? That's what we did when we were in the Army. We trained as we would fight. And you need to do that, the same process with trading. You need to be able to be in there. You need to be able to understand the charts. You need to be able to be in the charts regularly and then have that actual plan set in place, those number of rules that you just refuse to break, right? You have to have the discipline to follow those rules, follow that risk management, and keep that same percentage each time, right? Don't get, you know, into the point where you're starting to get out of character, or you're starting to, you know, leverage a little bit more, or take a couple of more trades, or get in on market impulse, because that's how you lose your account. That's how you lose your challenge, right? That's how you just fail to progress, because you fail to just trying to humble yourself and check yourself in the moment, right? When I find myself getting worked up in the charts, I stand up, I walk away, and I do something that makes me happy. I get myself back into the right frame of mind. If I take an L, no big deal. I go back, I review the trade, I turn it into a lesson. Why did I take an L on this? Well, I wasn't following my trading plan, right? I got excited, I saw a little bit of a market impulse move, and I thought, man, I don't want to miss out on this, so I hurried up and jumped in the trade. What did that do? It put me in a position to where I lost a little bit of money and I didn't follow my trading plan. What do I have to do next time? Follow my freaking trading plan, right? And that's the type of stuff that's going to be able to help you out. But when it comes to that risk management and that risk tolerance, you have to identify it now. First, what are you willing to lose? And then second, what are you actually able to lose? Right? So go through and start practicing the same way that you would as if you're going to get that challenged account and eventually work up to that live account, or even just growing your own personal account. It's good to get in that same practice, right? Because if you're willing to just blow all that type of money for no big deal, I mean, you might as well just send it to me and Adam. Just kidding. But guys, honestly, risk management is a huge piece, right? Psychologically and just financially, like, it is dependent on it. You have to have the discipline to follow your trading plan and just keep that very minimal risk tolerance, guys. You can find these trades. You already know you can. You can find these 1 to 3s, 1 to 5s, 1 to 7s, 1 to 15s, 1 to 20 setups, right? To where every now and then, if you take a couple of losses, it's not a big deal, because then you get that one trade that gives your account 9% growth, 10% growth, 15% growth, 20% growth. It happens. But you need to remain patient. You need to remain disciplined. You've got this. We'll see you guys in this next video.